Gene, from the notes, it sounds like you think Tesla stock hasn't seen the worst of it, that there will be better entry points.
I do believe so, Melissa. And just to put some perspective around this, is this earnings period is an opportunity, a rare opportunity where Tesla needs to get everyone on the same page. I'm still optimistic that this company is undervalued over the long term, but let's talk about Wednesday initially. There's the demand piece and then the profitability piece. On the demand side, we know that the price cut on the all-important Model Y, 30% price cut with the addition of the tax credit, has stoked demand. There's some very primitive tools we can use to look at how much of the demand has been stoked. But if you look at Google Trends, for example, search traffic around Model Y is up double from where it was a week ago. Model 3 is up 50%, and you look at the other EV makers, and they're all going down. And so that is an indication that demand is good. Retail investors are picking up on that. Also, the lead times, they've basically been extended out an additional month and a half over the past week. That's also been picked up. So part of this 8% move is anticipation, optimism that the 30% increase or decrease in price for that Model Y is going to have an outsized impact on volume. I expect that to be true. But there's one piece that we don't know as well, and this is to get everyone on the same page, which is the profit. And just to finish the thought, Melissa, is that their automotive gross margins, ex credits, were 27% in the September quarter. I expect them to give guidance somewhere between 15 and 20% for 2023, and that's the piece that I think will cause a dip in shares on Wednesday.
So, Gene, in theory, we should know all this. We know that the margins will have to come down because of these price cuts. That is just math, even if they're selling more cars. And so why wouldn't that be factored into the stock now, even with this run-up? Do you think that maybe it's not factored in enough?
Well, there's a couple reasons. One is that the volume piece, there is, well, let me just take a step back. I think retail is having an impact on Tesla shares here. I think there's an emotional side that plays into that. And I think that one of the emotional pieces is that as you think someone who's optimistic about this, maybe a little bit too optimistic in the near term, would say that the volume is going to create economies of scale that will basically support margins separately. I think that, or make the margins go down not as much as maybe what I believe that they'll go down. That's one piece to it. Another piece where this is just getting people on the same page is that the component supply, the component cost environment has been starting to get more favorable towards Tesla, but we don't know to what extent that is. I just do the simple math, is that the average discount across the board, across all of their vehicles, if you weight it by volume, is close to 15 to 20%. And that is, a lot of that comes from the profit. But Melissa, I think that's the reason why I think you see some of this move here, is that you can kind of build a case where it's not going to be as bad as what I'm predicting.
So, Gene, when you look at the stock and it traded down to that August 2020 level, did that have more to do with Musk's personality being divisive, or actually fundamentals in the stock? I'm long the stock, but I do not want to go into earnings. I agree with you. I don't want to go into earnings long, so I'll take a look after the fact. But the idea that it could upside surprise versus downside surprise, I'm erring on the downside surprise. It seems like that's where you are too.
Yeah, I am on that. Again, big believer in this. I don't want my optimism around the long term to change, and I could get this wrong, and it could be up 10%, but ultimately I'd still be positive. But what has impacted it over the last, what really pushed it lower was, of course, just concern about demand, and then they put the hammer down as on the pricing, and that just kind of gave confirmation. That's why you saw that big dip. So I still believe ultimately they're making the right decision. I would just say this: when you put all this together, I think that they're going to really put other car companies in a tight position in 2023 and 2024. And so, Steve, don't make me give you a mixed message there. I think that this is still a great company. I think that we just got to get everybody on the right page about what the profit profile looks like, because that's been a big part of the rise of Tesla shares over the past 3 years is just this really impressive gross margin.